Hello everyone, and welcome back to Explain the Charts. Today is October 21st, 2025, and we are taking a deep dive into one of the market's giants, Alphabet, ticker symbol Google. The stock has been on an incredible run, recently hitting a new 52-week high, and today we'll unpack the news driving this momentum and then analyze the charts to see what might come next. First, let's cover the current events, because the narrative around Google is overwhelmingly positive right now. Fundamentally, the company looks incredibly strong, with reports of a 13.87% revenue increase in 2024 and robust Q2 2025 results. The primary driver, without a doubt, is the artificial intelligence boom. Google is being hailed as a global AI leader with its Gemini AI, advanced TPU processors, and the transformation of Google Cloud into a profitable, AI-powered growth engine. This sentiment is echoed by analysts, with a strong buy consensus and Bank of America recently raising its price target. However, it's not all clear skies. There are some cautionary notes to consider, such as ongoing regulatory headlines around its Waymo self-driving unit and some instances of insider selling. Perhaps the most interesting point of contradiction is that while analysts rate the stock a strong buy, the average 12-month price target of $250.40 is actually below yesterday's closing price. This suggests that while sentiment is bullish, some analysts believe the stock may be fully valued in the near term after its recent explosive run. Now, let's see how this news landscape translates to the price action on the charts. Looking at the daily chart, we can see a powerful and sustained uptrend that began in early April 2025 from a low of around $140. The price has climbed aggressively, gaining over 80% to yesterday's all-time high of $257.33. This is a classic picture of a bull market leader, consistently setting higher highs and higher lows. The most immediate and critical level is, of course, that all-time high of $257.33, which now acts as our primary resistance. Any move higher will push the stock into price discovery mode, where there are no previous resistance levels. To the downside, we have several layers of support to watch. The first minor support level sits around the $254 mark, which was yesterday's low. Below that, the psychological and round number support at $250 is very important. A more significant support zone lies around the $240 level, which was the breakout point from the consolidation in early September. But the most significant feature on this chart in recent months is the massive breakaway gap we saw on September 3rd. This move was driven by immense buying pressure, confirmed by the huge volume spike of over 100 million shares. Let's zoom in on that period to get a better look. Here on the daily chart, focusing from September onwards, you can clearly see the massive gap up from around $211 to open near $226 on September 3rd. This type of gap is incredibly bullish, and the entire gap zone, from $211 to $226, now serves as a fortress of support for the long term. Following that powerful move, the stock consolidated healthily for about 2 weeks before its next major leg up. That next breakout happened on September 15th, when Alphabet officially joined the $3 trillion market cap club, as mentioned in the news. The price surged from the $240s to over $251 on massive volume, confirming the breakout and kicking off the rally to our current highs. This price action is a textbook example of a stock in a powerful uptrend, a strong impulse move, a period of consolidation, followed by another impulse move to new highs. Now let's switch to a lower time frame to analyze the most recent action around the all-time high. Switching over to the 1-hour chart, we can see the price action for the past few weeks in more detail. We can observe the steady climb throughout early October, leading into the sharp acceleration last week. Based on the live market data from today's search results, Google is trading around $253.55, representing a pullback of about 1.2% from yesterday's close. This pullback from the all-time high is perfectly normal and expected. The key question now is whether this is a small dip for buyers to get in, or the start of a more meaningful correction. On this hourly view, Immediate support is forming near today's low around the $253 level. If that fails to hold, the next support area is the consolidation zone from October 17th, right around $251 to $252. A break below $250 on the hourly chart would be a short-term bearish signal, suggesting a potential test of lower levels. To get an even closer look at how the all-time high was formed, let's jump to the 15-minute chart. Looking at the 15-minute chart from yesterday, October 20th, we can see the mechanics of the breakout. The stock opened with a strong gap up right at 1325 Universal Time Coordinated, jumping from the pre-market levels to over $256. That initial buying frenzy carried the price to its peak of $257.33 around 1540 Universal Time Coordinated. After hitting the peak, the stock began to pull back and consolidate for the remainder of the session, eventually closing near $256.55. This shows that while buyers were in control for most of the day, some profit-taking did emerge at the new highs. Today's further pullback continues that profit-taking. Traders will be watching to see if buyers step back in at these slightly lower prices to defend the recent breakout. So, let's bring it all together and recap the key takeaways. The fundamental and news-driven backdrop for Google is exceptionally bullish, primarily centered on its dominance in the AI space. The long-term and mid-term trends are undeniably strong. Let's summarize the most important price levels to watch. Our key resistance is the all-time high at $257.33. A sustained break above this level opens the door for a move toward $260 and beyond. Our first support zone is between $253 and $254, which is being tested today. Below that, the major psychological and technical support level is $250. Holding above $250 is critical for the short-term bullish case. If we lose $250, the next major support to watch is the previous breakout area around $240. So, what are the potential scenarios? The bullish scenario, which I see as having a roughly 70% probability given the strong momentum, is that this pullback finds support above $250. The stock would then consolidate for a few days before making another attempt to break the $257.33 all-time high. This would be reinforced by continued positive market sentiment or a strong upcoming Q3 earnings report. The bearish scenario, with a 30% probability, would involve a failure to hold the $250 support level. A break below $250 with increasing volume could trigger a deeper correction towards the $240 support zone. This could be sparked by a negative earnings surprise, bad news on the regulatory front, or a significant downturn in the broader market. The main thing to watch for in the coming days and weeks is the upcoming Q3 earnings report, as this will be a major catalyst. So in summary, we have a very strong stock that is extended and taking a breather after hitting a major milestone. Watch these key levels closely to see which way it breaks. If you found this analysis helpful, please hit the like button, subscribe to explain the charts, and ring the bell for future updates. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. You should always do your own research and consult with a professional before making any investment decisions. Thanks for watching, and we'll see you in the next one.